Thinking to invest in Shll stock, Shll, as it combined with Hyliion? Are you quite skeptical about the feasibility of this stock? Or you want to know the risk involved in holding the ownership of this company? Then watch this full video. It might be of help on your investing decisions. Hello guys, welcome back to my channel. It's me again, Manny Mai. If you're new to this channel, please click the subscribe button and your notification bell so you will be updated on my upcoming videos. Also, show me some love by clicking that like button so that you can help this channel to grow. Following the footsteps of Nikola in combining with Special Acquisition Company to be publicly listed in a fast and cost-effective manner is Hyliion Inc, a leader in electrified power solutions for Class 8 commercial vehicles, as it merged with Tortoise Acquisition Corporation, ticker Shll in NYSE. The surviving company shall be named then Hyliion Holdings Corporation, to be traded in NYSE as well, with a ticker Hyln, to be completed by the end of third quarter of 2020. This combination would mean that Hyliion won't undergo the usual expensive IPO procedures. It will inherit the current market value of a special acquisition company. So let's say that Shll's opening market price on that day of its IPO is 21.38, then that will be the valuation of Hyln symbol. Accordingly, implied market capitalization for this company is over $1.5 billion. Assuming no redemption, the new company will receive $520 million of cash proceeds and the $325 million fully committed PIPE to expedite Hyliion's electrified powertrain solutions, product production, operational growth, and for general corporate purposes. What makes Hyliion interesting to me? Actually, I'm interested with Hyliion because it has the ability to generate funds from private equity investors and venture capitalists like Sensata Technologies, Sumitomo Corporation of Americas, particularly Axioma Ventures, among others. It had generated more than $29.1 million, of which $8 million is from debt financing. $21 million is from Series A financing, which means that actually Axioma believe on the product viability of Hyliion as one of their venture capitalists. Moreover, it has a couple of undisclosed amounts in convertible notes and Series B financing, which is being received last January 14, 2020. That Series B financing indicates that Hyliion had already accomplished certain milestones in developing their business and had passed its initial startup. Therefore, as a retail investor, we can have that confidence actually that this company has viable business which can be successful someday. So what it means to us retail investors? Working capital gathered through private equity investors and venture capitalists is better than having pure debt financing because it can give us assurance that the company won't be having financial trouble in the short run. So do you want to risk your money paying off those debt? Remember that you're buying a share, so you're owning an ownership of that company. Therefore, in liquidation, your allocation is the last. Just imagine that risk involved in investing your money to a company with high debt to equity ratio together with expected negative gross and net margin in the first 5 years of operation. Remember that each startup, each new company, it has at least 5 years of existence before it can have a positive margin. In this industry, actually, electric vehicle, just like Tesla, it takes them more than 10 years to reach that positive margin. With that said, accordingly, at closing, there will be no cash payment to Hyliion's shareholders and lenders. That is, all convertible debt and equity holders shall receive their respective stock in the newly formed public company, which to me is a very good strategy. That is 100% amazing, because at this early stage of the company's operation, it is favorable to have a healthy financial balance sheet so that the company can focus its commercialization activities instead of paying interest on those debts or having a pressure in mind to meeting its maturing obligations. So perfect Hylion's management. The Thomas Hyliion Corporation is in mission to eliminate the carbon intensity and reduce the greenhouse gas emissions of commercial transportation Class 8 vehicles by being the leading provider of electrified powertrain solutions. With the capital to use and secured fundings from Tortoise, including cash on trust, this company can definitely produce their product and services. But first, let us take a look on its market feasibility. What makes this startup company interesting as well is their focus on producing that Class 8 tractor. Yes, this focus of producing a trailer sets Hyliion management by far to any startup companies like Nikola and Workhose, because it is important to devote your resources to your flagship product and then scale out further once you already penetrate that market of your first product. The infamous quote, "Focus is the name of the game," is always relevant in all generations. According to their investor presentation, the market for trailer electrification is about $800 billion. With distinct market positioning, using the revolution of renewable natural gas, Hylion's Hypertruck ERX is absolutely a game changer, as it highly powerful equipment which provides net negative carbon emissions. ERX is an intelligent electric powertrain having machine learning algorithms optimizing performance and efficiency. All new software features and updates is also done through the cloud. ERX uses 100% of natural gas, which is 35% less expensive than diesel. Can travel up to 1,300 miles, even fully loaded at 8,000 pounds. Insane acceleration from 0 to 60 in 20 seconds. That's amazing! Unlike Nikola, Hyliion has product available for sale right now. Their hybrid electric, which can provide significant cost savings of about 6%, while its future solution Hypertruck would have an average 35% savings against Tesla's battery electric vehicle and Nikola's F7 with negative 1% and negative 48% in comparison to today's diesel-powered truck vehicle. It means that Tesla actually and Nikola's technology is expensive compared to Hyln. Yes, it can help the environment clean and green, but are the benefits derived from having those new assets can exceed the cost of its ownership? As finance professional, being an accountant by profession, I know that the cost reduction is top priority of every business. Purchasing department must favor those entities which could provide goods and services with significant cost savings without sacrificing the benefits it can derive from the option it forgone. Since Hypertruck can provide each owner a 7-year low cost of ownership, compared to any diesel or battery electric vehicle for Class A trucks, then definitely this could be the number one asset of Hyliion's, the cost leadership. If only that they can serve that benefits as advertised, then market penetration can be easier as counting 1 to 3. Therefore, share price will go up, increasing shareholders' value through share appreciation. In addition to that, Hyln can serve their customer actually who wish to use their current truck by just integrating their powertrain technology to that existing vehicle such as Volvo, Kenworth, among others. How about the stations? How about those vehicles would run out of fuel? Actually, natural gas is more feasible than using the hydrogen technology because currently in United States and Canada, it has 913 total public stations of compressed natural gas and more than 700 in the United States. Therefore, customer adoption for this product is highly doable, right? Because for me, if I buy this new technology, well, it can give me support along the way, right? So that must be important when determining market feasibility in the short run. Moreover, Hyliion also has hybrid powertrains in hybrid CNG and hybrid diesel, as well as battery solutions which can support both hybrid and fully electric vehicle requirements. It just shows us that they won't rely on the sale of their Hypertruck only because they have another technology can be used as a source of revenue as well. So with this, I can say that Hylion's market feasibility is strong. But there's only one risk involved according to me. It is the barrier of entry. The economic moat on this industry is very narrow. That is, strong competition, or this industry is very competitive. Tesla, Volvo, and other financially capable manufacturer can enter into the market of natural gas easily. But being the leader or the pioneering on this segment in natural gas fuel, Hyliion has that significant leadership or having the knowledge and that precise technology. Hyliion has the niche of this market or at the forefront of that competition. In fact, it already had 1,000 units of pre-order from Agility, a $5 billion trucking company. The fulfillment of the sales order can be Hylion's source of marketing testimonials, which volume of production is scheduled by 2022. Agility had also agreed to invest in a private offering of securities by Tortoise Acquisition Corp in connection with its business combination with Hyliion's. Most importantly, the company had started to accept reservations to its Hypertruck ERX. A pre-order with a reservation of $5,000, which pricing on the truck is based on customization, which is good because as a buyer, I would love to be in control of my purchases and customize based on my needs. They also have this sweetener. The benefits to those who had reserved, including the priority allocation to ARX demo vehicles. And what I like this one is recognition on founding Hypertruck ARX customer on their marketing programs. For me, that is very good one because if I'm Walmart, if I'm the manager of Walmart or the owner of Walmart, and then I would love to have those services for the company that will promote also my logo or my brand on their marketing paraphernalia for free. Right? We all know that how that savings can provide to your company's value. Yes, the product is market feasible. But how about its capability on production? As opposed to Tesla and Nikola, who will develop their truck from the ground up, Hyln's lead company will leverage Dana Incorporated's manufacturing facility to manufacture their Hypertruck, then ship it directly to modification centers or truck makers right from Dana's facilities. As he said to ttnews.com, which Dana Incorporated also confirmed to their Twitter account, announcing the plan to provide their support to Hyliion's full volume production. With this, assurance as to order fulfillment is high. This model also gives the company distinct cost advantage as they have lower overhead costs as a result of outsourcing strategy. Though it has a couple of disadvantages like not able to control the production fully, but the quality of the outsourced product is quite better or higher than molding it or doing it internally. And the most important thing, profitability. So first, when I select a company to invest in or when I purchase stock, I always see the growth. So that's for ordinary companies, not a startup. And then I'll go to profitability, which is profit margin and gross margin. And then I'll go to its liquidity. So on this one, our analysis starts with financial liquidity and solvency. And last is profitability because this is a startup company. Hyliion's company's financial plan, to me, seems too aggressive. Having estimated positive gross margin of 2 million or 21.9% next year, that is in 2021. While net margin is positive at 2.3% by 2022, with revenue skyrocketed at 4,268%, while gross margin at 2023 and 2024 is 31.5% and 35.30% respectively, improving its earnings before interest, taxes, depreciation, and allowances margin at 21% or EBITDA at 21% and 28.8% in 2023 and 2024 respectively. Reaching a gross margin of 35% in just 5 years is incredible. It could be the source of different disappointments. From retail investors, as analysts would have a couple of bad recommendations, thoughts, and valuation causing its share price to fall, hence decreasing shareholders' wealth. We all know that it needs at least 5 years for companies to reach that positive margin. And overestimating your revenue estimate or your revenue growth, net margin, and EBITDA, it could give us trouble, right? Because it is very important to be realistic as well to limit everybody's expectation. Material weaknesses. First, once that tracking market has been fully served, we're talking here long-term investing, right? So let's say 20 years, 30 years, and that market already been served in North America. Okay, they can also expand in Asia, they can also expand in Europe. What's next then? Are they going to enter the electric vehicle for consumers market? Like Tesla and NIO? These have not discussed on their business plan. What are their timeline on penetrating that market? What could be their future plan on how to scale up their business? So that's what I'm looking for, and hopefully on their earnings report, maybe next year or the next 2 years, they will also tell us that they have the plan to enter that market. Looking to its investor presentation and website, it seems that the revenue is solely based on outright sales. I cannot see any options to leasing, either finance or operating lease. In this light, the company may face strong challenge going up on initial purchase price battle against Tesla and Nikola, as these two companies has a leasing option, either finance or operating lease. Because to me as well, there are a lot of companies who would choose finance or operating lease because they want to save money from purchasing or outright purchase. Let's say the value of the car is $500,000 and having rental here with the option to purchase at a bargain price at the end of the term is better, because purchasing or buying an equipment or owning a certain fixed assets, time value of money is also being considered. Bottom line, is SHL or HYLN after combination is a buy now? Or you need to wait until the end of the third quarter when the combination is completed? As of July 16, closing market price is 23.15. Following the case of Nikola, if trend continues when its shares goes up by 100% this after its IPO, then it's advisable to have a position right now to have an average cost below 30. Don't mind their PE ratio of 278.92 per Yahoo Finance, because this stock is a startup or a growing stock which had been started in the market. Electric vehicle is trending nowadays, and so the trucking business must adapt the change, as government and environmentalists is pushing to cleaner source of energy. With Hyliion's leadership in RCNG segment with less capital requirement due to its existing natural gas stations, its stock is a good buy against Nikola as a long-term play to aggressive long-term growth investor. As a growth stock, then expects volatility in the first 5 years of operations driven by investors' expectations, especially on the first 12 months when hype over the stock is high. So expect a bumpy road as it grows. The company has strong business plan, promising product and technology advancement. Presenting this business plan to lenders would easily give them line of credit or any forms of debt financing. Along with its patent and able management who knows what to do, just like deciding to no material liability upon completion, except having no concrete financial plan or expansion plan long term, like entering to consumer business as well, like Neo or Tesla's sedan or SUV. To me, SHL or HYLN is a good buy right now, but would personally short the stock when my profit is above 40 to 50%, because on its business model's weakness, particularly the lack of financing options. So just wash and rinse, then go back on its dip by a year or two when the hype on the stock is over. That's all for today, guys. See you all next week as I tackle another video on stock analysis. Don't forget to click that subscribe button and also your notification bell so you'll keep updated on my upcoming videos. Also, click that like button so that you can help this channel to grow for the purpose of our YouTube algorithm. Bye-bye!